How y'all doing, good people? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Please don't get yourself scammed. If you want to follow me when I'm not on YouTube, I'm going to ask you to go down to the description box and click on that Richard Fain Millionaire Mentor Instagram link. It's about halfway down in the description box of this video. Go click on that Instagram link and give me a follow on Instagram, and then send me a DM to let me know you're rocking with me. I really would appreciate that. My old Instagram page, Richard Fain 28, is no longer in operation. That had over 90,000 followers. Now I'm trying to rebuild the new Instagram page, Richard Fain Millionaire Mentor, trying to get those 90,000 people who followed me on the old page over to the new page. So that's why I mention it every day in the videos. So if you'll do me a big favor, if you want to keep up with me when I'm not on YouTube, do me a favor, give me a follow on Instagram, and then send me a DM just to let me know that you're rocking with me so that I can say thank you. I really would appreciate that. I'd like to get this page up to about 5,000 followers by the end of this month. We're close. We're about 47. Right now we got about 4,700 folks on the new Instagram page. But golly, I had 90,000 on the old one. So I know a bunch of y'all 90,000ers are still stuck over there thinking I'm in this old Instagram page when I'm not. So I'm trying to get some of the 90,000 over to the new Instagram page. So do me a favor, get down to the description box, click on that Instagram link, Richard Fain Millionaire Mentor, give me a follow, and then send me a DM to let me know you're rocking with me. Next thing that we're going to discuss real quick before we get into the meat and potatoes is the website, Richard Fain Millionaire Mentor website, which is www.richardfain.net. Second link down in the description box. That's a website that we've had up for about 2 months now, and it's been going extremely well. A couple 100,000 of you guys have already went over to the new website to check it out. A lot of you guys have made an investment in yourself and purchased some digital products that were handpicked by me. So certainly check those digital products out if you're looking for information on how to start a business, if you're looking for information on, the basics of the stock market, if you're trying to change your mindset from a bad behavior with money to a good behavior with money, we have a product called the Millionaire Mindset. Check that out. If you want to become a better money manager of your money, your money that you got coming into your household, a lot of it, at the end of the month, you ain't got no money. You're not managing it properly. We got a management digital product. It's a money management digital product to help you budget better. So check that out. Let's say you want to start an online business, but you're not quite sure how to do that. We got a product on the website that can help you start an online business, or at least give you the information you need to start an online business. Let's say you already got a business and you're just struggling with it. We got a small business survival guide that is packed with a bunch of information to help you get past your struggles and get your business to a point where it's profitable and doing what you want it to do. So 10 products, man, already handpicked by me. Go check them out. And then when you're over at the website, do me a favor, consider joining the mentorship club. That's the only place that I do mentoring on the internet. I don't do it on Instagram. I don't do it in the comment section of my videos. I don't do it through my RF Financial Consulting email address. The only place I do mentoring, guys, is through that private mentorship club through my website. So if you want to be mentored by me, if you want me on your gang of 5, if you want me on your financial team, if you also want to be around 600 other people who are headed in the same direction as you for encouragement and best practices and all the other stuff we do in the mentorship club. You know, the private 90-minute, 2-hour live streams we do every Monday. All of that stuff, man. If you want to be mentored by me and be a part of this community of like-minded people that we're building, go through the website, click on that membership or that join button, and get yourself involved, man. Get yourself around people who have a vested interest in seeing themselves get to freedom, but they also have a vested interest in helping others get to freedom. So be a part of that through the website. Last thing before we dive in is my Mumu brokerage app that I'm using for the next 10 years to triple my net worth. That link is down in the description box, first link. And Mumu is a self-directed brokerage app that I use to buy paper assets. That's what it is. I go on there, put my money in, and I buy paper assets like Nvidia, like SPLG, FTEC, the Magnificent Seven. I'm going to very soon starting to buy Chipotle once they have their 50-to-1 split. I'm contemplating if I want to continue, if I want to buy Visa or MasterCard, large payment processors who have a ton of opportunity outside of the United States. So I use Mumu brokerage app to do that. So if you're looking for a self-directed brokerage app that could help you or put you in a position to be able to buy paper assets to get you to your pot of gold at the end of the rainbow, click on that link. When you open up your new Mumu account, you put $100 in there, they're going to give you 5 free stocks. If you put $1,000 in your new brokerage account so that you can start investing with that $1,000, they're going to give you 15 free stocks. So if you want to take advantage of that offer, as well as use the same brokerage app I'm using, hey man, come rock with me. Get down to the description box, click on that first Mumu link and get started today. And then guess what I'm going to also do for you? If you sign up for Mumu, you know, make your deposit in there and you're locked and loaded and ready to go, send me an email through my website, www.richardfain.net. Send me an email through the website and say, Richard, I've opened my Mumu account. I funded my Mumu account. And then at that point, I'm going to send you some information. I'm going to send you 2 tutorial videos done by Mumu to help you learn how to use the brokerage app. See, that's the biggest complaint for a lot of people who are just starting out in this thing is they don't know how to use the brokerage app. I don't care which brokerage app you get. They don't know how to use it. So unless you have information given to you to help you understand how to use it effectively, you're going to be intimidated and you're not going to use it and you're not going to invest and you're not going to build wealth. So I'm going to send you tutorial videos to walk you through step by step how to use the app to be able to transact business, buy your paper assets, and hopefully get yourself to your pot of gold at the end of the rainbow. And then I'm going to also send you 2 videos outlining my wealth transfer blueprint 1.0, 2.0 to at least give you an idea of what I'm doing. So if you want to copy my plan, you certainly can. I'm not your financial advisor. I can't tell you what to buy, guys. I can't tell you when to sell. I can't tell you any of that stuff. All I can tell you is what I'm doing. And if you want to mirror what I'm doing, you're a big boy, you're a big girl, you can do that. If you don't want to mirror what I'm doing, don't. Pretty simple. I'm not here to tell you what to do, right? I'm here to give you information to help you make decisions on your own financial pathway. That's what my channel is about. That's what Mumu is about. That's what my wealth transfer blueprint videos are about. It's just to provide you information so that you can make an educated financial decision to build wealth. It helps you. That way you don't have to go out and do all the homework yourself. You can lean on me because I've done the homework. You better believe I've done the homework if I'm putting my money in it. Now, that doesn't mean you're going to be successful at it. That doesn't mean I'm going to be successful at it. What it does mean, though, is at least somebody has done the homework on this stuff, and I'm putting my money in it. Ain't no guarantee I'm hit a home run. But guess what? If you never get up to the plate and you never swing the bat, you never know, right? If I sit on the sideline, I guarantee myself not to hit a home run. But if I at least get up to the plate with the bat in my hand, ready to take my swings, I'll never know. Ain't nothing in this life guaranteed. Y'all know that. You know, we live in this world, and I'm so thankful to be able to live in this world, but nothing's guaranteed. There's an element of risk. Every day we wake up, we're taking an element of risk somewhere in our life. No guarantees, guys. But, if you take the necessary steps, educate yourself, now you give yourself a chance to win, right? If I get up to the plate, but I've never went to the batting cage, I've never practiced, I've never done anything, I just wake up one morning and go think I'm gonna hit a home run in the major leagues, I'm probably not. But guess what? If I train, right? If I go to the batting cage, if I practice up a little bit, I got a better opportunity now because I'm ready. I'm prepared. That's what I'm telling you with this tutorial videos and this information I'm going to send you through the website when you sign up for Mumu. I'm going to give you information to help you get yourself prepared to be able to go chase this financial freedom thing, right? So get down to that description box, click on that Mumu link, open it up today, go get your 5 free stocks when you put $100 in, go get yourself 15 free stocks when you put $1,000 in, and then you're gonna send me that email through my website and say, Richard, I'm ready to go, man. Send me those videos, send me those tutorials. I'm ready to get this thing started. Because this information I gotta share with you today, guys, hey man, it's an opportunity. It's not a guarantee, it's an opportunity. But that's what we wanted out of this life, right? We want good, strong opportunities to be able to build our wealth. And that's what I'm gonna share with you today. This week has been an incredible week, guys. I gotta admit it. I mean, we've had an incredible 5 days. Think about it. Monday, Nvidia executed, finalized its 10-to-1 split. The stock goes from roughly $1,200 a share on Friday, June 7th. And when the market opens on Monday, June 10th, it's $120 a share. 10-to-1 split. That happened on Monday, which in my opinion was just such an incredible opportunity for a lot of folks. Because a lot of folks couldn't afford the stock at $1,200 a share. But a lot more can afford it at $120 a share. So I think that decision by Nvidia will tenfold, will come back tenfold to them. And I'll share some information why I believe that. So that happened on Monday. So of course, you know, I'm all over this thing, right? I'm all over it. As soon as the market opened, I hadn't put my order in, boom, by 9:30, I'm in that thing. I'm in, right? So that's the first thing that happened. Second thing that happened on Tuesday was the Federal Reserve had their June meeting, their 2-day meeting. They started that meeting on Tuesday, June 11th, right? Why? They started that meeting because they were going to be discussing interest rates. And I have a vested interest. You should have a vested interest in what happens with interest rate, because we know when interest rates go down, our assets go up. So if you're an asset, if you're an investor buying assets, you have an invested interest in what the Fed does. They control interest rates. When interest rates come down, assets go up. So that meeting started on Tuesday. It concluded on Wednesday. So on Wednesday, we also had another big piece of data or information. Remember, we're about information, guys. The more information that we have, the more accurate information that we have helps us be better investors. If you're sitting around here and you have no access to information, you're not a good investor. I guarantee you, you're not. If you don't have access to information that you can process and help you make good, strong decisions about building wealth, how can you build wealth when you have no information? So that's why I'm telling you guys, if you want to be good investors, you got to start getting good information to be able to execute in order to become a good investor. So that's what happened all this week. The Fed met for 2 days. That's information, guys, we need to know. We need to know what the Fed is going to do with interest rates this year and next year. What did we find out, right? What did the Fed tell us this week about interest rates? They said, well, okay, guys, 1 rate cut on the table this year for right now. Based on the data that we have through June, We got one rate cut on the table. But guess what they told us about 2025, which I thought was extremely good news. You got 4 on the table for 2025. See, if you don't watch, guys, you don't know this information, you ain't gonna be able to position yourself in these assets to take advantage of this stuff, man. That's why I'm telling you, one rate cut this year is fantastic, but 2025 is really the year where the rate cuts are gonna pile up, I think. So what should I be doing in front of that 2025 potential 4 rate cuts? I'm gonna be buying assets like crazy because I know assets are gonna go up when interest rates go down. And if they're gonna go down 4 times next year, then my assets may go up 4 times. I'm not saying they're gonna go up, they're gonna 4X themselves in 6 months or 18 months. I'm just saying I got the opportunity 4 times next year for rates to go down. So I got the opportunity 4 times next year for the stock market to really have a nice bounce. And if it has a nice bounce in 25 and I bought these investments at a discount in 24, I just increased my net worth. Just like that. But that comes from information. You got to pay attention to information and then act on that information. So on Tuesday and Wednesday, that helped me as an investor. I said, okay, shoot, all of the rest of 2024, I'm going to be buying assets like crazy. I'm going to buy them like crazy because they're going to be discounted. Especially if the Fed is saying in 25, they're going to give 4 rate cuts. What? I might as well go to town the rest of this year. I'm just going to ratchet it up, start buying my assets, positioning myself for 25. So that's what the news that I got out of it. See, that's how that little bit of information made me such a better investor. Because now I'm going to load up this year, wait on them 4 rate cuts in 25, and potentially add some net worth to the pot of gold at in the rainbow. Right? Now, what else came out? CPI inflation report came out for May. Good news. So on Wednesday morning, what did we see in the stock market? What did we see with Nvidia? Shot up. See, I keep telling y'all guys, information is powerful if it's the right information. See, that good news data from that CPI inflation report showing inflation coming down was good news for the market. Investors love that. Stock market went on a little mini rally. Nvidia went on a little mini rally. And that little rally spilled all the way over until Thursday, right? Thursday, Nvidia hit what? $130 a share, I believe. And then it backed off to around 129 to end the day. So we go from a stock price of 120 on Monday to 130 in the span of 5 days. No, 4 days. Now, this morning, and we'll talk about that, this morning, Friday morning, had a little bit of a pullback, which is not unusual. And I'm going to tell you why, in my opinion, it's not unusual. Because typically, guys, when these investors are hitting these investments heavy, especially when they have a couple of good days, they had a couple of good days, right? They had a good Wednesday, right? They had a good Wednesday. They had a decent Tuesday. So guess what? Profits were made. Why not take some of those profits? If I'm a big time investor, I'm gonna take some of these profits on Friday. I had a good Monday, I had a good Tuesday, I had a good Wednesday, I had a good Thursday. The market was up. We saw the S&P 500 this week hit another all-time high. You think big time investors are not gonna take profits on Friday? Yeah, they're gonna take them. Why wouldn't they take them? They're dealing in millions and billions of dollars. They're gonna take them. Ain't nothing wrong with that. So that's what I think is happening on Friday. You got some big time investors. Wall Street, billionaires, right? Hedge funds, institutional investors, taking some profits. They had a good week. Nothing wrong with that. Even if you want to take profits, if you bought Nvidia at 120 on Monday and the sucker trading at 128, 129 today, you got profit. You can take it if you want to. That's up to you. This is what I'm trying to tell y'all guys. You take your profit whenever you want to take it. You got profit. If you bought on Monday when Nvidia slid down to 117 a share, and now you're at what? I don't know what it's at right now, but this morning it was at like 129. You got profit. Right now, you're at 131. The thing's still climbing. It's climbing right now. It's at $131.46. It opened on Monday at 120 a share. It slid to 117 on Monday. Now it's 131. See, all I'm telling you guys, if you want to take profits, take them. They're there. Richard, why ain't you taking profits? Well, that little bit of profit ain't gonna get me to the pot of gold at the rainbow. I need an island in the Caribbean, man. And with them little $9, $10 in profit, ain't gonna get it. Ain't gonna get it. I need this thing to go from 120 to 1,200. That's where my profit at. 1,000, 1,200, 800 a share, 500 a share. That's where my profit is. My profit ain't at no $131 a share because I bought at 120. I'm not saying that ain't your profit. You go get your profit if that's what you want to do for your profit. That ain't my profit. That ain't gonna do nothing for me. I need my profit 3x, 4x, 5x, 10x. That's what I'm waiting on, and that's what I'm gonna be talking to you guys about today. There are some analysts out here that believe the stock price can go from 120 to 1,200, and they've given a timetable for it. Now, I know a lot of people are gonna be like, you're insane, buddy. You're talking about a $30 trillion valuation. That'll never happen. Guys, let's hold your horses now. There have been a company, I don't know how many of them, but I know one company that did 10x after a split. That'd be Apple. If we go back in the early 2000s, I believe it was around 2000, and we'll talk about that, about 2010. Apple's about a $300 billion market cap. Today, they're a $3 trillion market cap. So it can be done. I don't know why people, it'll never be. I'm not going to never say never. Maybe it will, maybe it won't. But you know something? I'm an optimistic investor. Y'all know that about me. I'm not one of these pessimistic investors. I'm an optimistic, especially when history says it can be done. Apple did it. Apple did it. So why couldn't Nvidia be the first company that's a $30 trillion company? Why couldn't they be a $15 trillion company? Why can't they be a $10 trillion company? They can. And I'm on the ride with them. I'm on the rocket ship with them. So we're going to talk about that. But that's interesting, though. $120 slides down to 117 on Monday. Right now today, trading at 131, almost 132. For some of y'all, that's a $14 profit right there per share. You in the money right now. You in the money right now, some of y'all. So I don't want to hear this stuff about, Nvidia ain't make nobody no money. It just made somebody $14 a share. Whoever that person is. Somebody out there bought at 117 at the low on Monday, June 10th. Somebody bought at the low. 117 a share. You right now sitting at almost 132 a share. That sounds like profit to me. I wasn't very good in math, but I know 131 minus, let's take that back. It just popped up to 132.14. Now, I don't know how long the day is going to last at this, guys. It could end the day, who knows? But right now, if you want to take profit, you got in this thing on Monday. You got at this thing at 120, you got in 125, you got in at the low, 117, here go profit. Now, who's going to say you can't make money with Nvidia? Oh, it's too late, you can't make no money. That's money, guys. So listen, this is what I'm trying to tell y'all, guys. You can make money with this stock. You can make money with a bunch of stocks. Look what Apple is doing. These people wrote Apple off at the beginning of the year. First quarter, wrote them off. Oh, Apple's done. Apple ain't done nothing in so many quarters. Apple done, Apple this, Apple that. Guess what Apple doing now? Killing them, hitting them over the head with a sludge hammer. Right now. See, this is what I'm trying to tell y'all, man. Y'all got to get the information. You're talking about the Magnificent Seven here, man. People can say what they want to say about tech, but you cannot stop the future from coming. I don't care what you say and how much you want to live here in the present and in the past. You cannot stop time from moving. And as long as time moves forward, guess what? That's the future. And the future demands technology. Why do you think these 7 companies, the Magnificent 7, Tesla coming back now? Y'all see what Kathy Woods from ARK Investment, I think that's the name of her company, whatever her name is. Kathy Woods, I believe that's her name. Big time Wall Street investor, right? She got Tesla going to $2,600 a share at some point. See, this is what I'm trying to tell y'all, man. The Magnificent 7, why I love the Magnificent 7 so much is the future. You guys, I don't care how much you want to live in the present or how much you want to live in the past. You can't stop time. Time is not going to stop. It's going to keep moving forward. And these big boy companies like this, you can't, listen, man, Nvidia ain't going nowhere. They own 80% of the market share. Intel and this other little company, I'm going to tell y'all, not little company, but this other company, they ain't even close to these guys, man. You think they're going to catch these guys in the next 3 years? No. Now, could they catch them in 10 years? Could they catch them in 50? Yeah. But ain't nobody finna catch them in the next 3 to 5, and that's where they're going to do the damage. That's where I'm going to make my wealth. See, I'm going to make my wealth in the video these next 3 to 5 years before anybody can catch them. Now, if somebody catch them after that, they catch them. But boy, they ain't going to catch them in these next 3 to 5 years, and that's where I'm going to get my cha-ching. Nothing wrong with this $131, $132 share price if you want to get out of this thing right now and say, hey, I made a profit. That was a great little experience. I love it. I made my money. I'm good. I'm moving on to the next one. Nothing wrong with that. Because guess who else is doing that? Big boy investors are doing that. That's what they're doing. These big boy investors don't just move in this thing and stay for 5 years. These big boy investors come in with billions of dollars. They make them $5, $6, $7, $8, $9, $10 a share profit, and they get out. And then they come back again. And they just keep doing that over and over and over. That's one strategy. That's not my strategy because I don't have billions of dollars. That ain't my strategy because I don't have billions of dollars. I exit right now, I'm gonna make $5,000, $6,000, which is great money, but that ain't that's not gonna get me no island in the Caribbean. $5,000 ain't gonna get me no island in the Caribbean. No. See, I need like 50 times that amount, 100 times that amount, right? So I gotta get more. So I'm willing to stay in this thing longer to get more. I'm willing to stay in this thing from $120 a share to $500 a share, $600 a share. See, I'm willing to stay in that long. And if it takes 3 to 5 years to go from 120 to 500 or 120 to 1200, I'm willing to do that. But that's not everybody's course of action. All I'm telling you is if you've been on this thing with me from the beginning, which is Monday, June 10th, you have profits right now if you bought when the stock split on June 10th. If you bought at 120, if you bought at 117, if you bought at 125, you have profit right now that you can take if you want to. So think about that. Don't sit in this thing long as I'm gonna sit in it thinking, oh God, hey man, do what you feel like you need to do to get to your pot of gold at the end of the rainbow. Richard Fain's pot of gold at the end of the rainbow requires that I stay in it longer. It requires that for me. It may not require that for you, right? But I just wanted to give y'all that little tidbit of what this thing is doing. This thing is at 132, man. This thing is up $12 a share from the split already. It ain't even been a week. So y'all take that for what it's worth. But let's dive into this $1,200 a share. So we split on Monday at $120 a share. So on Friday, June 7th, the stock was $1,200, something like that. On Monday, June 10th, it was 120. So it split 10 to 1. So we started on this new journey of, for me at least, back to $1,200 a share. Because that's where we ended. On June 7th, we closed at $1,200 a share. That's where I want to get back to. That's where I'd love for Nvidia to get back to at some point in the future. So for me, the journey is, okay, it's 120. Let's go back to where it closed at on June 7th, 2024. That's where I want to be at. How long gonna take me to get to that again? What do I got to do to get to that number again? Because that number for me is crazy. Because the money that I got in the video right now, if I can get back to that number, the shares that I have right now, and then I'm gonna continue buying, if it can get to that number, it's crazy. It's like 10-figure money, right? It's like 10 figures. Not 10 figures. Let me back that up. Not 10 figures. I wish it was 10 figures. Not 10 figures, like 8 figures. Not 10. 10 would be, woo, goodness gracious. That would be nice. But it's not 10 figures. Let me pump the brakes on that one and go back. Let me correct that. 8 figures. If I can get 8 figures out of this thing, man, whoo, good Lord. It's going to be that's a blessing. So let's keep going. Here's my rationale for the 1200. See, I'm a research guy, right? I go out and research this stuff, look for articles, whether it be for or against. And this is a pretty good article that's giving you pros, giving you cons. And I like that. I don't mind the cons because I need to know what's out there too. I don't want to just be, so euphoric and bliss that I don't really know the truth, what's really out there, right? I want to know the truth too. That don't mean I'm going to lean negative on it. I'm going to lean positive, but I still want to know the truth. So here's the thing. After Nvidia's stock split, can it reach $1,200 again? That's the headline. And I'm getting this from Yahoo Finance. That's one of my go-tos, right? I like Yahoo Finance. Now, this is an article by Molly Fool, but it's through Yahoo Finance. So for you guys that like to go out and find these articles, I ain't finna be putting them all in the description box and all that stuff. But I'll tell you who it is. So if you go out there and do your own little homework. But here's the case. Let's walk through the $120 to $1,200 a share case. And let's see how long potentially it would be before you get there. According to this one analyst, right? The market can't get enough of artificial intelligence darling Nvidia. The semiconductor giant sits just shy of a $3 trillion valuation, making it the third largest company in the world. It was the second until Apple stepped their game up. Apple's trading like over $200 and some a share right now, guys. I've been buying Apple through Mag 7 for a long time. I'm talking about like in the 160s. Way down there. Now it's over 2 something. That's what I try to tell y'all guys. See, that's why I buy only big boy blue chip. I'm not saying you can't go out there and find winners and this other stuff out there, but it just ain't my thing. I'm big boy blue chip, and it's coming back. Apple's coming back. I don't know how long it'll last, but right now they are a money maker, and I'm loving it. Mag 7, I'm loving it, right? Nvidia is the premier provider of AI chips. Its hardware powers the technology so many believe is the next big thing. That's the question, right? Is it the next big thing? Will it last? Will it be a .com bubble? Some say yeah, some say no. You got to figure out where you end up on the side of that equation, right? Which side of that equation you end up on. I end up on the side of the equation that the future is the future. You can't stop it because you can't stop time. See, the future is the future. Can't stop it. So for me, this is the future. So I got to go with it, right? I got to go with time. I got to go with the future. Nvidia is the premier provider of AI chips. Its hardware powers the technology so many believe is the next big thing. Since ChatGPT-3 was first released to the public, Nvidia's stock is up almost 700%. And it tipped above $1,200 a share last week. They're talking about last Friday, June 7th. June 10th, $120 a share. Today, as we speak in this live stream, they're trading at $132 a share. Somebody right now is up $15 a share because it slid down to the low of 117 on Monday. So somebody is up $15 a share right now. Is that enough profit for you? You got to make that determination, guys. See, you can make money in this thing, but you got to figure out what your goal is. You got to figure out what your exit strategy is. You got to figure out what your target sell price is. and bounce. Take your $15 a share and bounce. And man, you made you a nice little profit in this thing. So, but if you stay in this thing, get ready for some turbulence. Get ready for some days where you're going to lose 15, not lose, but you're going to go down $15 per share on the stock. So be ready for those days if you stay in this thing. If you're not ready for that, take your $15, $10, $8 a share, whatever it is, and bounce. You made money, get out of this thing, because there will be turbulence. There will be volatility coming if we're going to get to $1,200 a share again. There will be people betting against the stock like there are right now. $35, $38 billion in short positions the last time I checked. That's a lot of people betting against this stock. So if you've made money, you're comfortable with this money you've made, bounce. Because turbulence is coming. A bumpy road is coming. Volatility is coming, guys, if we stay in this thing long enough. It's coming. Please, if you're not built for this, if you're not built for this turbulence, if you're not built for what's coming, get your profit and get out of this thing now, guys. If you're not built for this, and ain't no shame in that game. If you'd have made you $15 a share, $10 a share, $8 a share, and you're happy with that gain, get out. If you're not built for this thing long term, you got to be built for this long term to be able to withstand this turbulence that's coming. So I'm just FYI, I'm on the record. Get yourself out of this thing while you're up. You've been in this thing 1 week and you're up $15 a share. You're up $10 a share. You're up $8 a share. You've been in 1 week. Get out if you're not built for this thing long term. Okay, let's keep moving. Shares are now trading at around $130. What happened? No, the company's stock did not crater and lose 90% of its value. Instead, the massive rise in price led to the company to initiate a 10-to-1 split. We talked about that. Shareholders now own 10 times as many shares as they did before the split. Keep moving. The split is like, well, I don't even go into all that. It wouldn't be the first time. Reaching 1,200 again would mean a 10x from today's price. See, that's where people get a little crazy, right? Because now people are thinking, golly, this thing, to 10x this thing, you got to be a $30 trillion company. There's nobody ever done that. But that doesn't mean there haven't been companies in the past that have done this same trajectory, that have 10x after a split. Apple is one of them. Apple is one of them. I'm going to go through it here with you, but Apple is one of those companies that did that, right? So would this be the first time a company 10x? No, won't be the first time. So reaching 1,200 again would mean a 10x from today's price. Nvidia already pulled off a 10x in the last 3 years. See, that's what people are having heartburn with right there, guys. See, in 3 years, they pulled off a 10x. They did. They pulled off a 3x over the last 10 years. Now we're saying they're going to pull another 10x. We'll see. We'll see, right? So we'll see. So it says Nvidia already pulled off a 10x in the last 3 years. But doing so again would mean reaching a 30 trillion market cap. A mind-boggling figure. It's a different ball game when you are already the third largest company in the world, but it's not without precedent. That's all I needed to hear. Ding, 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 ding. Ding, ding. See, I'm one of these guys. Has it been done before? Y'all know I'm a history guy if you've been following this channel. When it comes to my assets, when it comes to me buying real estate, when it comes to me buying paper assets, when it comes to me starting a business, I'm a history guy. I want to know what has already happened, because that tells me what can happen in the future. If it's already happened in the past, guys, it can happen again in the future. That's the way I look at it. See, I'm that type of investor. You show me an ETF that has already delivered over 10 years a 10 to 12% rate of return on your money, give me that ETF, because I think it can do it again. That's how I am, right? So I'm looking for companies that have done this. Thank you for this. These folks here, they kind of gave it to me, right? And it's a big boy. It's a big boy. In 2010, Apple was the second largest company in the world. The company made headlines that year as it neared a 300 billion market cap. Fast forward to 2022, and Apple was again in the headlines, this time as the largest company in the world and the first to pass the 3 trillion mark. I bet 3 trillion seemed mind-boggling to a lot of investors in 2010, but here we are. See what I'm saying, guys? I don't care what the naysayers say. They said the same thing in 2010. There's no company will ever get the 3 trillion. Nobody can get the 3 trillion. Guess what Apple did? Just did it. Guess what Microsoft did? Did it. Guess what Nvidia did? Did it. 2010, nobody said it could be done. Right? 14 years later, you got 3 companies that have done it. So don't tell me what can't be done, guys. It's possible. I'm not saying it will 100% happen, but it's possible. It's possible. So let's keep moving. Look to the market for clues. Let's start by assuming Nvidia's growth will slow from the past 3 years. Now, not everybody, but a lot of people are saying, okay, guys, and I've told you guys this, don't get triggered if these guys don't do triple digit every time the earnings report come out. That's just not sustainable. I mean, they'd be $100 trillion company. So the larger you get, guys, the more revenue you get, it's harder and harder to do triple digits. So it's not going to surprise me if we go into, Q2, Q3, Q4, and things start tapering off a little bit. That doesn't mean it's not a great company. It's just not sustainable. As you grow up the revenue level, you go up the revenue scale, it's just not sustainable. Okay? So I like this. This is going the same direction I'd like for it to go. Right? Let's start by assuming Nvidia's growth will slow from the past 3 years. What's a more reasonable rate? Right? Forget all this triple digit stuff. What's a more reasonable growth rate that they can sustain and get us to where we want to get to? That's the question. What is a more reasonable growth rate? Not the triple digit stuff. That won't last. Let's get into the pocket of doing something that we can be sustainable, right? And what? And continue to repeat, but be sustainable. The market. So what is a reasonable rate? The market as a whole is a good place to start. So you take this company and you say, okay, this triple digit stuff, great, but that won't last. Let's go to the market. Let's see what the market is doing. And let's say if they can do what the market is doing, let's use that as the gauge. That's what we're coming to, right? So it says here, the market as a whole is a good place to start. Statistica.com predicts a compounded annual growth rate, here's a short name for it, CAGA, of about 28.5 through 2030 for the entire AI market. So statistically speaking, this Statistica.com predicts a compounded annual growth of about 28.5% compounded annually through 2030, which is 6 years from now, for the entire AI market, right? Keep that in mind. If that growth rate holds, it would take roughly 9 years for Nvidia's stock to reach 1,200 again. Now we get into the meat and potatoes. All right, so okay, if they can grow, this is what we got to capsulize and get into our filter system, right? Or at least me. Y'all can do whatever you want to do. I ain't your financial advisor. I'm just telling you my filter system. This is what I'm hanging my hat on. If they can grow at around 29% compounded over the next 6 years, The stock price has an opportunity, over the next 9 years, not 6 years, 9 years, the stock price has an opportunity potentially to go back to what? $1,200 a share. If that happens, that's a 10x on my money. That's why I'm in this game, guys. That's why I'm in this game. See, I'm in this game for that. I'm in this game for that right there. That's why I'm in this game. That's why I'm buying this stock. Right? That's why I'm buying this stock. So hey, if 9 years is too long for you, bounce. Get your profit and get out, man. When it's time for you to go, go. Don't wait around. I don't blame you. I don't blame anybody that's in the green right now that says, you know something, Richard? Hey, man, this thing, listen, if I can hit a home run, perfect, but I just can't risk it. I made me 5, 10, 15, 20, 30, 40, 50, 60, 70, 80, $100,000 in this stock in the first week. That's enough for me and my family. We're going to go on to something else. Man, I ain't mad at you. Young lady ain't mad at you. People ain't mad at you. Make that money and get on out of this thing if you've made your money, man. That's all I'm saying. Don't stick around because this guy on YouTube's sticking around. Your financial situation might be different than mine. I got to stay around because my dream, my goal, my end result is a huge one. I got a huge end result. And I can't get to that end result unless I get a huge return. I'm willing to take the risk. I'm willing to take the risk that this company goes to $1,200, $1,000, $800, $700, $500 a share where I can really make the kind of money I need to make. I'm willing to take that calculated risk. Everybody isn't. So all I'm telling you, and at any time in this process, when you feel like you've reached your end and you've made the money you want to make, you got to get out. You got to take your profits and get on out of here, man. Don't, young lady, whoever it is, don't stick around in this thing. If you made your money, get out. The last thing I want to see somebody who was in the green, they done made money, and they just stayed too long, way above what they're capable of tolerating when it comes to this volatility and this turbulence. Don't take yourself through that if you ain't built for it. I'm just saying, if you ain't built for it mentally, guys, don't take yourself through this. Take your profits and get yourself out of here. See, I'm built for it. I've been doing this for 30 years. Plus, I ain't got all my eggs in one basket. So, this ain't the only basket that I got. I got some more baskets out here, right? I got some more baskets where 80% of my wealth is in these other baskets. I got like 20% of my wealth in this basket. So if this basket, if somebody came and stole all the golden eggs and it's an empty basket, I still got 80% of my money over here. So I'm built for this because I'm diversified and I got, you know what I'm saying? Everybody ain't built for this. So all I'm saying is if you're in the green right now and you're comfortable with where you're at in the green, consider getting out because it's going to get bumpy from here on out, right? It's going to get bumpy. So let's go. Let's keep talking about this process, right? This $1,200 a share. How do we get there? Let's recap real quick. 28.5% is what Statistica.com believes over the next 6 years on a compounded annual growth rate of 28.5% for the entire AI market, right? So if that growth rate holds, it would take roughly 9 years for Nvidia stock to reach 1,200 again. So if Nvidia can grow compounded 28.5% compounded over the next 9 years, you go from $120 a share stock to 1,200. 9 years. Right? If you get a 35, 40%, you cut that down. If you get a 20, you increase it. You decrease it, you increase it. But this is the kind of data that I need to see for the filter system, right? This is the data that I need to see that gives me a clear cut, that makes sense. Okay, if the market grows at 28.5, they can go at 28.5, sustain that for 9 years, we got an opportunity here. I'm okay with that because I got a 10-year blueprint. See, I got a 10-year blueprint. My blueprint calls for 10 years, 10 more years in the stock market. I've been in the stock market for 30. I got 10 more years in here. That's what the blueprint calls for. That's well within my blueprint. I'd like for it to happen in 3 to 5. Maybe it won't based on this data. But the blueprint is 10 years. Can I stay in this turbulence for 10 years? I can stay in this violent, turbulent, volatile stock for 10 years if there's no material change in the company. If it's still number one in market share, if it's still doing the things that it's doing now, being innovative, being number one in I'm okay with that. I'll stay in it for 10 years. If the company starts deteriorating and it's not hitting the numbers, I'm a bounce. It's pretty simple. I will stay in it if they continue doing what they've been doing and they can extrapolate that out over the next 9, 10 years. I'll stay in this thing all the way with them. But if they start this funny business where, okay, you know, somebody done passed them, the CEO acting crazy like Elon doing, and all this other stuff, I got to get out. Take my little profits and I'm out. Whatever it is. I don't care if it's $5. I'm out of there. Take my little money, put it in something else, and continue my journey for 10 years. So that's the strategy for me. The strategy is to stay in this thing as long as I got to stay in it, as long as I don't have to be in here more than 10 years. I will stay in 10 years if the company doesn't deteriorate. And I'll be watching it like one of them hawks from 5 miles up in the air. They can catch one of them little rabbits running around. That's how I'm going to be watching it every single day. Why? Because I got a lot of my wealth tied up in this. It ain't all my wealth. It's about 20% of my net worth is in this stock, man. So I'm all in this thing. I ain't fooling around. And I believe what I'm reading here. I believe this can happen. So let's keep moving. Let's keep moving. But before you get too excited, see, this is why I love this article, because they don't just give you all the Hollywood stuff. Give you some of this other stuff too. But before you get too excited, there are a few pretty huge assumptions there. We're assuming that projected CAGR holds beyond 2030. And that it isn't overinflated to begin with. So basically what they're saying there is we're making an assumption that the AI market will hold up and deliver a 28, 29% return year over year, annualized. We're making an assumption that the AI market can sustain that. That's what he's saying. We don't have a crystal ball. We're assuming it can do that, not just 6 years, but in Nvidia's case, 9 years. So that's what he's saying. That's an assumption we're making, right? We don't know that. We're projecting. We don't know that, but we're saying, hey, if it can do that, we got a good shot at this thing, right? So we're assuming that projected CAGR holds beyond 2030 and that it isn't overinflated to begin with. Secondly, we're assuming that the market will value Nvidia relative to its earnings the same over time. So there's some assumptions we're making here, or he's making, and I'm agreeing with, right? This isn't necessarily true. Just because a company grows its earnings doesn't mean its stock price will respond in kind, but it's a useful simplification for now. Well, think about it, guys. Look what Nvidia has done over the last 4 quarters. Some would say the stock price should have been higher. Just saying. Some say the stock price should have been higher. Why wasn't it? Because everybody ain't bought into it. See, everybody's not bought into Nvidia on Wall Street. Everybody's not. That's why the stock price ain't higher. That's why you got a fast food. That's why you got a fast food restaurant like Chipotle with a $3,000 stock price. You know, I mean, come on, really? Now you're comparing apples to oranges, I know, but I'm just throwing that out there, right? You got Chipotle $3,000 a share stock. Now, I don't know what their split history has been like compared to Nvidia's split history. Maybe if Nvidia never did a split, maybe they would be, who knows? I'm just trying to show you how sometimes the market doesn't fully embrace something. And I don't believe they have fully embraced artificial intelligence yet. I don't believe the broader stock market, not stock market, but the broader economy, the broader institutional investors, big gigantic hedge. A lot of these people haven't really fully embraced artificial intelligence. But I think they will. I think they will. I think they will. I think they're going to have to, because that's the future. I think they're going to have to. So, yeah, a lot of assumptions here, but I think they're logical assumptions. They're logical. They're logical. It's logical to believe a company like Nvidia can grow at a 28% compounded annualized growth rate over the next 9 years. I think that's logical. I do, but it's just me. That's just me. So let's keep moving. Let's keep moving. It isn't necessarily true. Just because a company grows its earnings doesn't mean its stock price will respond in kind, but it is useful simplification for now. So if we make those assumptions, can Nvidia grow at the same rate as the overall market? I'm not sure it's likely for a few reasons, competition being chief among them. So you got some pros, you got some cons. Another one of the cons on top of the assumptions. The assumptions is the first con. The second con is competition, right? You got competition, right? So we got competition now, probably gonna have more competition coming, right? Because it's big money to be made. So chips won't be in such short supply. Right now, people are saying Nvidia has a hold on this thing because they're out front. They control most of the chip manufacturing. But as more companies get better and bring in their own chips, there's competition. My thing I'm saying is you can't just roll out of bed one morning and come up with one of these Blackwell chips to compete with Blackwell or H100 or H2. You just can't roll out of the bed and do that. It takes years to do that. So next 3 to 5 years, I don't see anybody catching them. Now, past that, perhaps, but I don't see anybody catching them in the next 3 to 5 years. But here we go. Excuse me. Nvidia currently has a near stranglehold on the AI chip market, about 80% market share. This gives Nvidia a lot of pricing power, allowing it to enjoy incredible profit margins. But I think this will change. That's one of the cons. Since they have such a large market share, they can charge whatever they want to charge. A lot of people believe as the market share shrinks, they got to bring down those profit margins. Those profit margins will shrink as their dominance in the market shrinks, right? 80% market share right now. If that shrinks down to 50%, that means you're going to have to bring down those margins a little bit. So I like the fairness of this article because it gives you the pros, it gives you the cons, and that's a competition is a huge con, right? That's a huge con against this stock getting to $1,200 a share. That's why I'm telling you got to be built for this, guys. You have to be built for the long term to be in this thing. You got to be built for this. Some of us aren't. Some of us are. If you're not built for it, decide what your target sell price is and get yourself out of this thing. Get you a nice profit, get on out, flow back into ETFs, and you're done with this thing. I do not recommend people out here try to be stock pickers and abandon ETFs and abandon index funds. No, don't do that, guys. Please don't do that. Now, it's your financial plan. You do whatever you want to do. But my recommendation is never abandon ETFs. Never abandon index funds because they're passive investments that track indexes and they track sectors. It's not one company. It's multiple companies. Like the S&P 500, right? It tracks. See, the S&P 500 index has the top 500 companies in America in it. Every industry, every sector, not just tech. Every industry, every sector. So if tech does bad 1 quarter or 2 quarters or for a whole year, you got 10, 11 other industries that might hit it out the park. That's why S&P 500 ETF is so important in my portfolio. It protects me. It protects me, and I don't have to be the expert, because guess what? If one of those 500 companies is not performing and cutting the mustard, Richard Fain ain't got to go replace it. It automatically is replaced by the index. Therefore, my ETF automatically replaces it because it's tracking the index. That's where I hang my hat, guys, because I don't have to be the expert. I don't have to be on the hook for this stuff when I'm investing in ETFs and index funds. When I invest in individual stocks like Nvidia, I got to be the expert. I got to pick winners and losers. I got to do all the research. I got to get out of the position. I can't have some fun get me out of the position. No, I got to get out of the position. And a lot of times we stay in positions too long because we take our logical thinking cap off and we are using our emotional thinking cap, and we just go, well, I'll make it up. We don't make it up. It'll make it up. And you just make it all the way down. You don't have that in ETFs. You don't have that in index funds. You don't have to worry about that. Because if that sucker ain't performing in the S&P 500 index, if it's not hitting a certain threshold, it's automatically going to get booted out. Period. Ain't no emotions in that. It's all logical in that. ETFs, index funds is 100% logical. There ain't no emotions. When I'm picking individual stocks, emotions come into play. That's why people that pick individual stocks can't outperform ETFs. They can't outperform, not over a 10-year period, they typically can't outperform. Even hedge funds, institutional investors are hard to outperform an S&P 500 ETF over a 10-year block of time. Now, they can outperform them in a year, 2 years, but over a 10-year block of time, it's hard for them to outperform it. Why? Because there are human beings picking the stocks. There are human beings and emotions get involved. When emotions get involved, you can't beat something that's only logically thinking 100% of the time when you're not logically thinking 100% of the time. I'd like to think I'm logically thinking 100% of the time when I'm buying individual stocks, but I'm not. I'm not. Probably half of that time I got my emotional thinking cap on. 50% maybe logical, maybe 75% is emotional, 25% is logical. But over here in these ETFs, man, 100% logical all the time. Ain't no emotions at all. That's why I love ETFs. That's where I built my wealth over these last 25 years, man, is in ETFs and index funds and some mutual funds early on. Now, I don't do mutual funds anymore, but early on when I started, that's all the plan administrator for this bank that I was working for offered. They only did mutual funds. They didn't do no index funds. They didn't do no ETFs. Now, I got all my stuff over at Vanguard for my big boy stuff. All my 401k rollovers from my banking days are with Vanguard. And guess what? I'm heavy into ETFs. I'm heavy into index funds. So all I'm telling you guys is this individual stock stuff is sexy. It's adrenaline rushing. The euphoria of it is all great when things are in the green. But when things turn red, that's when you really figure out who you are. When this thing turns red, and it will at some point, that's when you're going to really find out who you are. All I'm telling you, if you ain't built for this, take your profits and get out, right? If you're not built for it. So here we go. Nvidia currently has a stranglehold on the AI chip market, about 80% market share. This gives Nvidia a lot of purchasing power, allowing it to enjoy incredible profit margins, but I think this will change. Longtime competitors, Intel and Advanced Micro Devices, are doing everything they can to catch up. To date, they haven't been able to produce something on par with Nvidia in the eyes of the market. But make no mistake, they are trying. AMD CEO Lisa Su said at a recent unveiling of the company's latest chips, AI is our #1 priority. Nvidia isn't the only company capable of producing hardware that can serve the industry. See, that's competition, man. When they starting to call you out by name, you know they irritated. And they're going to do everything under the sun, whether it's legal, illegal, to get you off of that throne. I keep telling y'all guys, anytime you're the 900-pound gorilla, all the little bitty gorillas running around in the jungle, you know, you the silverback. You the big boy. You sitting up there looking around, looking all big and mean, but you got all them little silverbacks, little baby silverbacks running around there saying, you know, I'm gonna be that guy. And then they get together with all the other little baby silverbacks running around the jungle, right? You got the big silverback sitting up there all flexed up, you know, probably got, you know, wait, you say that, all flexed up. Then you got all these little silverbacks running around, collaborating with each other. Hey man, y'all see the big silverback? I want to be him one day. Let's gang up. Let's figure out a way to attack him. Let's figure out a way to take him down. See, that's real stuff, guys. I tell you what, if you want to see something that's real interesting, go on Netflix. They got a documentary called Chimp Nation on Netflix. Go on Netflix and check out this documentary called Chimp Nation. I think it's called Chimp Nation. I'm telling you, man, this thing is crazy. I mean, they spent like a couple of years with these chimps and how the hierarchy works and how it's just insane, right? I don't watch it like 2 or 3 times. It's just crazy. But my point is, when you got a company like Nvidia, who is the big 900-pound silverback, and then you got these other silverbacks, but they're smaller, they're little ones. Now, I'm not saying Intel is small, and I'm not saying this what the name of the company is? Advanced Micro Device. I don't know how large these companies are, but clearly if Nvidia got 80% of the market share, they ain't something, right? They not where Nvidia is. My point is, they're gonna want to take Nvidia down. They're gonna do whatever they can, just like with these chimps. They're gonna take that silverback down at some point. The silverback doesn't reign for 100 years. Or chimp empire, that's what it's called, chimp empire. It don't reign for 100 years. You got these little chimps running around, collaborating with each other to try to take you down every time you turn around. So what does the big silverback do? He got to flex his power. So what he does periodically, he runs through their little area they live and flexes his power and jump on people and attack people. Not people, but chimps. All I'm telling you guys is that's how Nvidia will have to be. They're going to have to beat these jokers back because they want that market share. And you got companies that are coming, right? Like they said, Intel, Advanced Micro Devices are doing everything they can to catch up, right? They're doing everything they can. The CEO of AMD basically says our number one priority, the number one priority is to catch up. Nvidia isn't the only company capable of producing hardware that can service the industry. So you know competition is coming. The question is how fast can the competition catch up? That's the question. How fast will that market share deteriorate? See, I'm hanging my hat on it won't deteriorate in the next 3-5 years. I don't think so. I don't think it'll deteriorate in the next 3-5 years. So that's what I'm hanging my hat on. So I'm hoping that we can get some exponential growth in the next 3 years out of this stock, out of this company, right? So let's move on and wrap this thing up. And it's not just rival chip makers. Perhaps more concerning is that Nvidia's main rivals, think Alphabet, Microsoft, and Amazon, are pouring money into their own chip-making programs, hoping to detach themselves from outside suppliers altogether. Nvidia will have to stay ahead of the most innovative companies in the world and do it at a price that remains competitive. So a lot of stuff, right? You got pros, you got these cons, and it makes sense. And he's right. Alphabet, Microsoft, and Amazon are trying to make their own chips. The problem is that's not their core competency. See, it's not their core competency. I can understand Intel and this other outfit, Advanced Micro Devices. But these other companies like Microsoft, Alphabet, and Amazon, I ain't worried about them because that's not their core competency. What they're going to do is spend billions and billions and billions and billions and billions and billions of dollars and may not get it right. Who wants to do that? Now, I'm not saying they won't try to attempt it, but I ain't worried about them companies catching them because, you know, they're not. Microsoft is a software company, right? I mean, I know they do a little bit of hardware stuff, but they mostly software, right? Obviously, you know what Alphabet does. It's a search engine. And then they got this cloud thing, right? And then, of course, Amazon is a big online retailer with the cloud thing. So everybody's getting to this cloud thing. Everybody wants to store data in this cloud thing. Don't get me wrong. Amazon got a good one. AWS is a beast. Alphabet is coming along with theirs. And I'm sure Microsoft has theirs. My point is, you cannot compete with Nvidia when what they do is their core competency. What you're trying to do to compete with them is not your core competency. So I'm not worried about them companies. Who you worry about are companies that do exactly what Nvidia does, and they're the ones you got to worry about. Especially when the CEO of some of these companies come out and say, yeah, Nvidia ain't the only one. Come on, guys, they ain't the only, when you start hearing that kind of talk, you know these people are prepared to do whatever they got to do to win. Legal, illegal, right? Back to the chip empire with these silverbacks and these other little things running around here trying to take out the silverback. That's a perfect analogy for me. So let's keep moving. A more reasonable view. So let's look at a more reasonable view and wrap this thing up on this hope of mine that Nvidia can get back to $1,200 a share and 10x my investment. Because if I can 10x my investment, like I said, that's a nice little 8-figure deal for me. I'm loving that. I'm not saying that can happen, but if it does, that's a nice 8-figure payoff. I'm loving that, right? But I got to stay in this thing. I got to be built for it. I got to go through the ups. I got to go through the downs. And I'm going to have to stay in this thing maybe 10 years to get that 10x. Am I willing to do that? Yes. Everybody is not. So figure out what you're willing to do, and that's what you roll with. So a more reasonable view. Let's wrap this thing up. Can Nvidia reach 1,200 again? That's the question. Here's what he thinks. Here's what I think. Absolutely. Will it? I think it's likely. When? Don't expect a repeat of the last 3 years. A more reasonable timeline would be at least a decade. I'm okay with that because I got a decade in the wealth transfer blueprint. See, I like this. Can Nvidia reach 1,200 again? Absolutely. That's my opinion. That's the author's opinion. Will it? I think it's likely. When? A decade. I think it's reasonable to give them a decade to do it. Could they do it sooner? Yes. Could it take them longer? Yes. But let's give them a decade. I'm okay with that. The filter system has already processed that. I'm built for this thing because I got 80% of my net worth somewhere else, cha-ching in it. 80% of the net worth is in ETFs, cha-ching in it. Well, I don't have to be the expert. I got to pay no attention to them. Just let them rock and roll. I ain't got to spend no time researching nothing. Nothing. Just let that 80% continue to get this little 8 to 10% rate of return. And then I got the big boy behemoth, the big silverback over here trying to get me a 28 or 30% return or a 10x. But that's 20% of the net worth, 80% of the net worth. So I'm built for this. Why? Because all my eggs ain't in one basket. I'm not going to lose any sleep. Would it hurt if I went to zero on this thing? Would it hurt? Yes. Would it devastate me? No. I still wouldn't change. My lifestyle wouldn't change one bit. I just won't be able to get the island in the Caribbean. That's all. I have to go over there and pay for it. I got to go over there like a tourist. I won't own nothing, but I definitely will go. I just won't own nothing. I won't own my own little island, right? But I can still go to the Caribbean. I just won't own nothing. I'll rent it for 2-3 days, week, 2 weeks. So if it goes to zero, will that change my lifestyle to where it is today in the United States? No. Because 80% of my money is working somewhere else. But it will prevent me from going to the Caribbean and buying me a nice piece of land in the Caribbean out there somewhere. It will prevent me from doing that if I go to zero on this. But it won't change my lifestyle here in America. So all I'm telling you guys is figure out what you're trying to get accomplished with this stock. Diversify yourself. Don't keep all your eggs in this basket. Diversify. Don't be out here trying to pick individual stocks like you're a stock expert, because you're not. Because I'm not. Anybody that's watching this video, you're not a stock expert. If you were a stock expert, you wouldn't be in this video. Let's just keep it 100. If you was a stock expert and you knew what you're doing, you'd be a billionaire somewhere on your own island with $100 million yacht, with a helicopter pad, 4 or 5 mansions around the world. If you were a stock expert, we're not. None of us are stock experts. We're just people out here trying to figure out how do we get to our wealth. And I say you hang your hat on ETFs and index funds. And then you do this little stock thing over here as just a sidebar. But I would not be out here trying to be some stock picker. Oh, I got 100 different stocks. Good for you. I don't want no 100 stocks. No. The 100 stocks that I got are going to be in my ETFs. I got like 500 in the S&P. I got 500 stocks in the S&P. I got about 325 stocks in my information technology ETF. And then on the business side, in my index fund, VTSAX, I got about, I don't know how many companies in that, but it's a lot of them. It's a total stock market. It's the equivalent to the total stock market ETF, VTI. So VTSAX is the index fund on Vanguard's side, but the equivalent to that from an ETF standpoint is VTI. And I believe VTI got about 3,500 companies in it. I'm not sure about VSAX, but that's what I invest in through my business, through my simple IRA. I invest in VSAX. And I started investing in VSAX, man, when it was back in the, I don't know, 4 or 5 years ago when it was in the 80s a share, $85 a share. Now it's up to, I don't know, 126, 120. That's how I build wealth, guys. Just over time, getting that incremental growth in the stock price or the ETF per share price over 10, 15 years. That's how I built the wealth, man. Not hitting home runs like this. Getting that 8%, 10% consistently compounded over 10 years, 15, 20. That's how I built the majority of my wealth. This right here is just one last ditch effort to try to hit a home run so I can get this island over in the Caribbean. Outside of that, that's the only reason I'm doing it. But I'm built for it because I'm diversified. You got to figure out if you're built for it. Let's finish this thing up. So we answered the question, can Nvidia reach 1,200? In my opinion, it can. Maybe in your opinion, it can't. But that's okay. It's okay for us to disagree. I say absolutely. The author of this article says absolutely. Is it likely? Yes. When can we expect it? 10 years. That would still be amazing growth that far outpaces what the vast majority of solid investments return. He is absolutely right. Getting too hung up on giant multiples or specific price targets can ultimately distract from making sound decisions in the market. There you go, guys. What do you think? What do you think about this notion of $120 a share to $1,200 a share over the next 10 years? Did this gentleman make a strong enough case? In my eyes, he did. He made a compelling case, and I'm going to save this article and I'm going to follow this guy just to get more, because see, that's the type of stuff I like. Something that's really easy to understand and simple to follow. Not a bunch of graphs and charts and all these other things. I like that. It's very simple to follow. So I'm going to follow this guy, and I'm going to actually put this particular article, I'm going to send it over to the private mentorship group to let them read the whole article and dissect it, because I think it's important that they understand. I think it's important that you understand. I think it's important that I understand that there is no substitute for diversification. It's just not. Nobody should have 100% of their money, in my opinion, in Nvidia stock. Nobody should have 100% of the money that they're investing in paper assets in individual stocks. That's my opinion. You don't have to agree with it, but that's my opinion. I think you got to be diversified because none of us are experts in here. None of us. We're all beginners. We're all retail investors who don't really know a whole lot about any of this stuff, including me. But I'm saved because I don't have to know a lot about it because I got 80% of my money with professionals that do know. And they're called ETFs, not some financial advisor over here that's picking individual stocks and in and out of stuff, and not that kind of professional. The professional I hang my hat on are S&P 500 ETFs like SPLG, information technology ETFs like FTEC, because those are the experts. The fund, it tracks an index. It tracks a sector. That's what I hang my hat on, right? So I don't have to be the expert. Nvidia, I'm trying to be the expert. Mag 7, I'm trying to be the expert. How do I justify that? Well, I justify it because I'm only investing in big boy blue chip, historically proven companies. So I don't have to be an expert to pick those. So I don't have to be an expert to pick Apple. I mean, come on. If you're from the world that I live in, if you might have just teleported here from another planet, maybe another solar system. Maybe you just teleported here from another solar system and you've never heard of Apple. But most people that have been on this earth for the last 20 years, they've heard of Apple, right? Unless you just teleported here from some other galaxy, you've heard of Microsoft. You've heard of Tesla. You've heard of Amazon. You've heard of Alphabet. So when I do pick individual stocks, I'm not picking something I ain't never heard of and somebody done gave me some hot tip. Oh, this is an IPO, man. They up and coming. They gonna kill it. No, I don't invest in that. So even though I'm trying to be the expert, I really don't have to be the expert because I'm investing in companies that are just giants. They're giants. You're talking about the top 7 companies in America. They're giants. If those companies went to zero, our whole financial system would go to zero. Everything. America would go to zero if those 7 companies went to zero. These companies are worth trillions and trillions and trillions of dollars, guys. They don't just go to zero. Maybe one might, but not all 7. So I don't even look at that as being an expert. That's just, I'm invested in Apple. I mean, come on, guys. I'm investing in Microsoft. I'm investing in Google. I mean, really? That ain't even a stretch. That's not even, you don't even have to be an expert to do that. So that's how I reduce me having to be the expert. This is how I survive mentally when I'm picking individual stocks, because I only pick big boy, blue chip. I don't mess with nothing else. Oh, did you get you some GameStop? No. And I ain't never gonna buy no GameStop. Why would I buy that? I wouldn't. I don't know anything about GameStop. So I wouldn't buy it. Is it in the Magnificent Seven? It didn't know. I ain't buying, no. Well, why would you buy Visa? Because Visa is a payment system. If you know anything about payment systems, if you know anything about what credit card debt is right now, if you know anything about how these people actually make their money, these credit card payment systems. So you got three phases of that, right? What do you got? The issuer, right? You got the processor, and then you got the payment system, or the operating system, or whatever they call it. So it's like 3 legs to it. See, Visa, they got the network. They're the network, right? So you got the issuer, normally banks like JP Morgan Chase, Capital One. Those are issuers. And then you got processors. Now, JP Morgan Chase is not only an issuer, but they're a processor. So they double whammy in this thing. But you can't get around the operating system, though. You can't get around Visa because they got the network. Visa owns the network. MasterCard owns the network. See, when you own the network, you're getting paid from the processor. You're getting paid from the issuer. When you own the network, Visa owns the network. MasterCard owns the network. They on the network, they killing it. So that's why I may take, and they're about a half a billion dollar market cap right now, somewhere in that neighborhood, about a half a billion market cap. So they ain't a big boy, but hell, their market cap is pretty much close to Walmart, because I think Walmart's market cap. What is Walmart's market cap? Let's see. Walmart market cap. Walmart market cap. Let's see. Yeah, see, Walmart's market cap is only 537 billion, guys. Nvidia is 3 trillion. 3 trillion. Walmart is 537 billion. Now let's see what Visa's market cap is. Let's see what Visa's market cap is. $542 billion. 542 billion. Trading at about $270 a share right now. So why would you go? Because you got emerging markets, right? You got a lot of parts of the country, not country, but the world that don't even, they can bring in their network. They can bring in their network and could be a $1 trillion company one day. If they can get into these emerging markets and bring in the network. So you need the network. JP Morgan, Capital One, all these processors, they need the network. Visa owns the network, right? What's JP Morgan's market cap? Let's look at JP Morgan's market cap real quick. JPM market cap. Their market cap is 556 billion. All I'm trying to get you guys to understand, you're talking about companies like Apple, when you're talking to companies like Amazon, Microsoft, I mean, all of these, look, Nvidia, Amazon, Alphabet, Microsoft, and Apple all have trillion-dollar valuations. Matter of fact, they all have over $1.5 trillion valuations. Amazon and Alphabet or Google, close to $2 trillion valuations. And then the other three, they're at $3 trillion valuations. So it ain't hard for me to invest in companies like that. It's just not. Right? It's just not. So you got to figure that out, what you want to do with this stock, guys. I just thought I'd want to give you just a walk you through a case study so that you kind of understand why I'm leaning and I'm in this thing long term. I still recommend you figure out what's the right time for you to get in and out of this thing. If you're built for the long run, understand volatility will come, understand red days will come, understand we may have a earnings report that doesn't go our way, doesn't mean it's a bad company, but there'll be adversity. Understand it won't go from $120 a share to $1,200 a share in 2 years. It's not gonna happen. More like 10 years. But I'm okay with that because I'm in a 10-year investment horizon anyway. So just know that. If you're comfortable with your profit that you got now, get out of this thing. That's all I can tell you. Get out of this thing. If you're not built for this long term, get out of this thing if you're not built for it long term. Like I said, guys, get down to that description box. Do me a big favor. Click on that Mumu link if you want to have a self-directed brokerage app that I use in order to buy my Nvidia stock, in order to buy my other investments. Certainly, get down in the description box and check it out. When you open your Mumu account, they're going to give you 5 free stocks when you put $100 in there. They're going to give you 15 free stocks if you put $1,000 in your brokerage account. And then you can take that $100 or that $1,000 and go buy paper assets to start building your wealth using the Mumu brokerage app. It's a great brokerage app. It's self-directed. They got a lot of tutorials. They got a lot of stuff in there that can help you learn about investing where you don't have to, you can just spend time on that app, man, and learn a lot about investing, just the basic stuff, right? Now, what I will do to collapse timeframes for you, if you send me an email through my website, www.richardfain.net, which is the second link down in the description box. If you send me an email and say, Richard, I opened my Mumu account, would you please, and I funded it, would you please send me those Mumu tutorial videos that will teach me how to use the app, and then send me your wealth transfer blueprint so that I know what you're investing in over the next 10 years to triple your net worth. I just want to know what you're doing. I want to know the ticker symbols. Doesn't mean you got to copy my plan, but at least you know what I'm doing, the guy you're watching on YouTube or the guy you're rubbing elbows with over in the private mentorship group, right? So I will send you that information hands down. So again, down in the description box, click on that Mumu link, sign up today, go get that free stock, go get that free money, and put yourself in a position where you're ready to rock and roll. And you'll be rocking with me because that's the brokerage app I'm using as well to build wealth. Also, while you're down in the description box, click on the website link, www.richardfain.net. Got some wonderful digital products over there that you guys can go check out and hopefully make an investment in yourself and purchase some of those great digital products that collapse time frames and get you to your pot of gold faster. Also, do me a huge favor, consider joining the private mentorship group over there that we have through the website. I'm telling you guys, it's growing. We got about 600 members over there already. We do a bunch of stuff over there. We got a lot of participation. We got a community chat. Of course, I make posts every day, right? I get direct messages from club members about their financial situation, and I provide my 30 years of experience building wealth to kind of help them and guide them through some of these financial questions that they need answered, so they can have access to me 7 days a week, 365 days a year. I make it my point to within a 24-hour period, I'm gonna return every direct message, and I'm gonna try to hit every post that people make a comment on. I'm trying to hit everything they put in the community chat, and I love doing it because that brings me joy. It brings me joy to be able to help others get to their pot of gold at the end of the rainbow. So we have a good time. And again, guys, it ain't all just about me over there. It's really about the 600 other people over there that are heading in the direction you're gonna be heading in, which is to freedom, right? It's love to get around people who got the logical thinking cap on and who understand the direction that they're going, because you got people over there that have different degrees of financial experience, different degrees of investing experience. And the only rule we have over there is we don't tell people what to do. Of course, we're not rude, of course, and we don't try to be an expert. That's the only rules over there. No experts, don't be telling people what to do. And if you're gonna tell people and give people a suggestion, have some data to back it up. Okay, I like QQQM. Well, give me some data to back up why you like QQQM. Don't just be throwing out, I like QQQM and it's a 20% year-to-date return. No, back up why you like it and give us some more data on it. Or don't mention it. That's the only rules, right? So if you're gonna mention something that you have had good experience with, back it up with some concrete data. That's the only ask of me. Be polite and keep a positive attitude. And no experts, right? And no trying to sell stuff over there. Don't be no links and all that stuff. And nobody has done that. So but I like to keep it a buck. So for new people coming in, they know exactly. My group over there, they know that, and we rock that way. And I'm the same way. I ain't over there trying to sell nothing. And I'm not over there saying, hey guys, blah, 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 blah. I ain't selling nothing over there. So why somebody else gonna be selling something? Right? No, we don't rock like that. I ain't in there trying to sell nobody nothing. All I'm in there doing is trying to help people with my experience and have others help them and give them a safe place that they can go ahead and ask their financial questions and not feel bad about it because someone says, oh, what are you worried about that for? You'll never do that. Oh, girl, you ain't gonna never get to no $1 million. You know how we are. Little crab in a bucket mentality. You know how we get sometimes. Because I ain't got no ambition to get to $1 million. I want to make sure your ambition down here with me in this bucket. We ain't letting your ambition out. You come down here back with me. I ain't gonna get to $1 million. I guarantee you ain't gonna get there either. Come back down in this bucket. We don't do that over there in the mentorship club. We don't do that. If somebody has an ambition to reach a certain net worth, we're going to encourage that, right? We're going to encourage it. So if you want to get yourself around a group of people, man, go in the direction you're going, join that mentorship club through the website, man, right? Give it a shot. Well, thank you guys. Appreciate you, man. Y'all know I'll be back here tomorrow, 10:30 a.m. Eastern time on a Saturday edition with some more financial tips and nuggets and tidbits and all kind of good little stuff like that. I'll be back. Hopefully you guys are having a wonderful Friday. The weather has kind of cleared up here in rainy Florida. So it looks like today I was able to get out this morning and get the full 4 miles in. Felt great. Feel great right now. Getting ready to go run a few little errands and then certainly get back over into the private mentorship group and chop it up with them folks over there, see how they doing today. But I hope y'all have a wonderful Friday, man. Do me a favor, do yourself a solid by doing something nice for yourself today. Also, think about doing something nice for somebody else, right? Let's do something nice for us that doesn't involve money or spending money. And let's do something nice for somebody else that doesn't involve spending money. Just do it because it's the right thing to do as a human being, right? Right? Let's just do that. Let's work on that. And for those of you that's going to be tapping out and ain't going to be in for the weekend, any of you fathers out there, have a wonderful Father's Day weekend. Have a wonderful Father's Day weekend. All right? Well, appreciate y'all, man. Lock it in with a thumbs up before you get out of here. I appreciate you. You know I do. You know I appreciate you. So lock it in with a thumbs up. And I'm going to see some of y'all back here tomorrow, 10:30 a.m. Eastern time. And I'm going to see some of y'all over in the private mentorship club here in a little bit. So y'all keep it going. Keep it going. Don't let people stop you, right? Thoughts become things. See it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. And I'm going to catch you guys on the next one. Peace.